Everyone loves to hate Ethereum right now, and that's exactly what makes it so interesting. It's one of the most criticized cryptocurrencies, but that's potentially an opportunity. Let's have a look at the data most people are not considering. I've run several simulations of buying and selling Ethereum versus Bitcoin, and Ethereum seems to be at a turnaround. Now, here is the narrative everybody is buying into. And yes, this was a valid reason to sell Ethereum a few weeks back. We did make money with the decline of Ethereum in the last weeks. But have a look at the number of stacked Ethereum over time. That's how much ETH is currently bought by public companies. And this is slowing down. And this is mainly driven by Tom Lee's BitMine. If we remove BitMine from that chart and we just look at all of those other companies and see how quickly are they currently accumulating, the answer is there is no accumulation. Only Tom Lee is buying, and he's buying at a slower rate, and he will stop buying once he's hit the 4 to 5% mark. So when he owns 4 to 5% of all of Ethereum supply, he might completely stop buying ETH, and then this chart will just be flat. It's already flat for every company that's not BitMine. And that is why it's so easy to hate on Ethereum right now. For Bitcoin, the situation looks different. The public companies that buy Bitcoin continue to accumulate at similar paces. We might even argue that there's a bit of an acceleration. You might have heard of a major recent purchase by Michael Saylor's strategy. Also, the long-term holders of Bitcoin are accumulating right now. They are buying the dip. Combine all of this with the chart of Ethereum relative to Bitcoin, and ETH looks very, very weak. ETH seems to be the obvious short right now. Here is the chart I'm referring to. This is Ethereum's market cap relative to Bitcoin's market cap. This is the rally that was triggered by Tom Lee's BitMine. The accumulation has slowed down in August, September of last year. That's when all the other companies have stopped their purchases, and that's when Bitcoin started to outperform. And this very much supports the thesis of ETH falling again, that there might be another major selling event ahead, where ETH might underperform Bitcoin by another 20%. So that's the easy thesis. This is what everybody is currently looking at. But I don't think this is the entire thesis. I have run simulations of buying and selling Ethereum relative to Bitcoin. And I want to figure out at what point did historically the trend turn around. Here's the result. This is Bitcoin relative to ETH. If we trade a moving average, then the 37-day simple moving average is the best to trade the ratio. So that's BTC relative to ETH. When the ratio is above that moving average, the line in white, we should rather buy Bitcoin and sell Ethereum. When the line is below that line, we should rather buy ETH and sell Bitcoin. And currently we are below the line. So this rather looks bullish for Ethereum. This looks like maybe Ethereum can break out. That's not what many people have on their radar right now. This is how well the strategy worked since 2019. Relatively consistent outperformance. 2023 wasn't that great, but outside of that, every year following the trend using the moving average did much better than just holding a fixed ratio of BTC to ETH. Here are the numbers. It's an annualized return of 45%, much better than holding the fixed ratio. The maximum drawdown is also lower. The maximum drawdown duration is also shorter, roughly cut in half. But of course, there are some bad signals. Every now and then, we might be buying Bitcoin for Ethereum to then swap it back around again, to buy Ethereum for Bitcoin, to swap it around again. And those kinds of swaps, they're expensive in terms of fees. They're also expensive because we buy the expensive asset for the cheap asset, and then we sell the cheap asset for the expensive asset. So those movements around the moving average are quite dangerous. But there's an alternative way to try to time the trends, and that's by introducing another moving average. We've already done this with individual cryptocurrencies. We've never done this with cryptocurrency ratios. So the idea is straightforward. We want to bet on rising prices when the shorter moving average is above the longer moving average. That's when we are going long, and we go short when the quick moving average is below the longer term moving average. That's when the trend is rather down. The question is, what's the best combination of moving averages? What historically at least worked the best for Bitcoin versus Ethereum, and how well does the strategy work? Here's an analysis. So we've got all the moving averages from the 2-day to the 200-day moving average. This is in 5-day increments, and we can see pretty much all of the winners are just shorter term, as in we just want to look at the top 50 moving averages maybe. And that's then this chart here. This looks at all moving averages from the 2-day to the 50-day simple moving average. And this here is the best combination. What's that combination? The answer is 19-day for the quick moving average and 25-day for the longer term moving average. Here are the numbers. Following that trend strategy more than doubles our stack in Bitcoin and Ethereum every single year. At least historically, that's what the trading strategy has done. Will the strategy work as well in the future as it did in the past? Of course, nobody knows, but I do think that the gains are quite consistent. They might be slowing down now somewhat compared to the past because there was much more volatility in the early days, but still, I think this looks better than just holding a fixed ratio of BTC versus ETH. It does make sense to time the market. This is how that looks like over time. We've got both moving averages. Let's take away the price from that chart just to make it a bit clearer. And we bet on rising prices when the shorter term moving average, the line in turquoise, is above, and we bet on falling prices when the line in turquoise is below the white line. Again, it's the 19-day and the 25-day simple moving average that's shown over here. And what does this tell us? It tells us that Bitcoin relative to Ethereum might be falling from here. And it gives us the exact same result as the price cross, the counterintuitive result, the result that Ethereum might have some catch up to do versus Bitcoin. That maybe this negative momentum might finally turn around. This could actually be the most likely outcome. The bearish trend might not prevail, and maybe we get a new narrative. It might not be treasury companies, it might be something else. It could also just be a sell-off of Bitcoin and not necessarily a rally of Ethereum. But I don't think that the trend will simply continue. I think there is a good chance that ETH is going up from here, at least relative to Bitcoin. Now, how much risk can we deploy towards that strategy? How much leverage can we deploy? Can we lever this up with 5 or 10x? Should we just have spot holdings? What's at least mathematically ideal? The answer to that question is here in this chart. This is a leverage optimization chart. And interestingly enough, both for the long and the short position, exactly 2x is the ideal leverage, which gives us the highest annualized return. Please note though that adding leverage to any position also increases the volatility. This is a logarithmic scale, and compare this performance now with this performance. This is without leverage and fixed betting sizes, and this is with leverage using the entire portfolio every single time. So we've got some volatility drag here as well. We do get much more performance, but we also get more volatility. So if you want to be safe, just trade the spot and use those two moving averages as a trend signal. I think Ethereum has a good chance of breaking out. We might see the thing nobody is expecting. And I'm personally setting myself up in that as well. So when I bet on falling altcoins, for example, I bet very often on falling altcoin prices because they tend to underperform Bitcoin and Ethereum most of the time. I used to use Bitcoin as a hedge against this. So I bet on falling prices of altcoins, I bet on rising prices of Bitcoin. Now, because of this potential breakout, I'm going to diversify the hedge a bit more. So I will buy Bitcoin and Ethereum and then use that as the long position, and then against this as short position, all the altcoins that I'm not so bullish on, right? The altcoins that have a very quick inflating supply that tend to underperform Bitcoin and ETH. So the choice of the hedge is also dependent on where I see this ratio here going. And I think while Ethereum used to be the pretty clear loser, it might now finally turn around. It does make sense to have at least some ETH in the portfolio now. If you got some value out of this video, feel free to give it a like. It will help the channel grow. If it's your very first time here, feel free to also subscribe. I publish videos regularly on this channel. I always back everything that I say here with data. And of course, you have to decide for yourself what you're doing with that. Thanks for watching. See you next time on YouTube, or see you potentially also in the premium membership. This is where I share my own trades. The link to premium is shown down below. Cheers.